Hello, fellow investors, and welcome back to Borex Investing. What a week it has been. The long-awaited annual September sell-off showed up fashionably late. It seems to have arrived in October instead this year. But the good news is we're almost through October now and heading into November and December, which historically tend to be strong months for the market. So there's been a lot of news in the past week, but in today's video, I want to focus on two companies. First, a quick update on Nebius and what's been driving its recent price action. And then a breakdown of Tesla's latest earnings and some of my key takeaways from the call. Tesla's earnings calls are always entertaining. They remind me of Steve Jobs' product launches back in the day when he was leading Apple. And there's always a mix of bold claims, vision, and that showmanship that keeps everyone tuned in. So the latest call was no different. All right, let's start with Nebius. So one of my highest conviction plays, Nebius, ticker NBIS, took a pretty big hit in the past 2 weeks, but to be fair, it wasn't just Nebius. The price hit was not driven by any negative news related to the company. It was a sector-wide pullback that hit almost every single major AI name. Big runners across the board sold off, especially the high beta speculative AI plays like CoreWeave, Iren, Applied Digital, and even Palantir. So a lot of the financial media turned up the narrative of an AI bubble, which probably amplified the sell-off after those banking credit crunch fears came out 2 weeks ago. But honestly, I think this was a manufactured pullback, a perfect opportunity for big institutional investors to load up on shares. Remember, about 78% of funds have been underperforming the S&P 500 benchmark this year. A correction like this gave them a window to buy high growth names at cheaper prices. So Nebius dipped below $100 after trading as high as $140 just a couple weeks back. So it really looked like back then it was heading to $150 right before that fall pullback hit. So personally, I added shares when it dropped under $110, and I also sold $100 cash secured puts earlier in the week that ended up expiring worthless. So I collected premium, but I missed out on adding even more shares at $100. And now sentiment finally seems to be turning around. On Thursday, after Oracle's $38 billion debt deal to fund new data centers was reported by Bloomberg, the entire AI sector caught a wave of positive momentum almost immediately. So for me, I'm just happy I got to add more Nebius shares at a big discount. If the company posts solid earnings and the market turns bullish again, this thing could easily make a run back to $150 or even $200 in the near future. And at that point, I really won't care whether I picked it up at 105 or 95 in the past week. I'll just be glad that I got to buy more shares on the dip. And here's the thing, despite all that recent market noise, Nebius actually had some very positive developments this week that most people probably missed during the sell-off. So first, a new data center in Israel was opened ahead of schedule. Nebius unveiled its new AI cloud facility, which includes one of Israel's first publicly available deployments of NVIDIA Blackwell GPUs, and that's huge, both in terms of scale and strategic visibility. So Israel is often called the Silicon Valley of the Middle East, and it's home to hundreds of AI startups, defense tech innovators, and research labs. A lot of big tech names already have a pretty sizable presence there, like Microsoft, Google, Intel, IBM, or Micron. So having a next-gen Nebius data center there isn't just about adding capacity, it's about planting a flag in one of the most advanced tech ecosystems in the world. It strengthens Nebius's global footprint and gives them direct access to a skilled developer community, as well as potential partnerships with Israeli AI and robotics firms. So overall, it's a very good strategic business move in my opinion. And second, a big partnership was actually announced. Avride, a Nebius-owned subsidiary that is a leading developer of autonomous driving tech, announced a $375 million investment and commercial partnership with Uber. So this builds out their earlier multi-year agreement with Uber, and the plan is to launch Avride's robotaxi service on Uber's platform in Dallas by the end of 2025. So I personally think Nebius will eventually sell Avride to Uber down the road, and that will be a nice cash injection if or when that happens. So this will be very interesting to watch unfold. Lastly, mark your calendars because Nebius officially announced that it will report Q3 2025 earnings on November 11th before the market opens. So remember, this is a big one. It'll be the first earnings call where management can directly address the recent Microsoft partnership, and I'll definitely be tuning into that to see how they frame the narrative. So not just around the deal, but also about future potential collaborations with other hyperscalers. So how they position themselves in that ecosystem could really give us a real glimpse into where Nebius is heading next. All right, so speaking of earnings and high beta names, the ultimate high beta play, Tesla, reported their results this week, and honestly, they were kind of mixed. So Tesla posted a 12% increase in third quarter revenue on Wednesday after 2 straight quarters of declines. So that's good news on the top line, but on the bottom line, earnings missed analyst expectations. So EPS was 50 versus 54 estimated. Revenue was 28 billion versus 26 estimated. And unfortunately, their stock was initially down on the news. So quick disclaimer, I do own a small position in Tesla, about 100 shares worth roughly 44,000 USD right now, but I don't hold them just for price appreciation. I use them as part of my wheel strategy, selling covered calls for income. Tesla offers some of the highest option premiums out there, so it's a great stock for generating cash flow if you own the shares. Now back to the actual earnings call. So what really stood out to me is that it wasn't so much about Tesla's current vehicle lineup, it was more about the company's vision for the future. Elon spent most of the call talking about AI, robotics, and automation, not cars. So it's like he's just using the current car lineup to fund innovation into their next generation of products. That's what it seems like, at least. He sounded especially upbeat about robotaxis and Optimus, the humanoid robot project. He described Optimus as having fine motor control suitable for medical and manufacturing environments, and even called it a multi-trillion-dollar opportunity hiding in plain sight. So I think if Optimus can eventually handle surgical or precision manufacturing tasks, that could be incredible for the workforce in dealing with labor shortages from low birth rates that we're seeing across the globe. I'm curious, by the way, if Optimus does pull off these robot surgeries, what it would do to the just entire robotics and medical industry going forward. And to try to demonstrate that we are not that far off from this future, Musk said Optimus robots are already patrolling Tesla's Palo Alto offices 24 hours a day, 7 days a week. So I think that's very interesting. Real robots walking around their engineering HQ nonstop. It sounds crazy and futuristic, but then again, I'm sure mathematicians thought calculators were crazy the first time they saw them too. So Musk also talked about what he called Tesla's single biggest expansion in production, the Cybercab, which will start production in Q2 of next year. According to Musk, it doesn't have a steering wheel or pedals. It's designed purely to minimize the cost per mile of operation. He said they'll scale production as fast as suppliers can keep up, and they're already thinking about new factory locations to support expansion. Musk also added that robotaxi will go live in multiple states by year end with 6 billion supervised miles already logged. So that's really Tesla just flexing its massive real world data advantage in autonomy. And speaking of FSD and autonomy, Tesla's Q3 2025 vehicle safety report shows 1 crash per 6.3 million miles driven with autopilot engaged, compared to the US average of 1 crash per 700,000 miles. So that makes Tesla's system roughly 9 times safer than human driving. That's pretty interesting. But anyways, the call made one thing crystal clear. Tesla isn't just an EV company anymore, it's becoming an AI company, maybe the ultimate AI company. Now look, in my eyes, Elon is a phenomenal salesman. He's a polarizing figure, sure, but he knows how to get people excited. And it's hard to argue with his track record. He's delivered on massive world-changing ideas before, and that credibility carries weight. I'll admit, every time I watch him talk about what Tesla could become, whether it's AI, robotics, or automation, it gets me hyped up and honestly makes me want to own more shares. Because if these humanoid robots truly evolve into a key part of the global workforce, it's hard not to imagine what that could do to Tesla's valuation and share price. So I think at some point in 2026, I will double or consider doubling my Tesla position. But right now, I want to wait and see how much progress is made in the next few months as Elon is now fully recommitted to the company. All right, well, that's it for this week. If you found this interesting, please like and subscribe. And let me know in the comments if you feel this pullback is over and if you were courageous enough to buy the dip. Thank you. I'll see you next time.